and of course law firms that have capitulated and have folded to the president. I will tell you, there is one institution you cannot say that. Wall Street Journal editor. Now they're right. Yeah. Every day, and they're not doing it from some left. They're doing it from a very conservative. Mr. President, please don't threaten the Fed chair. You're going to cause a market rout. Please don't. Be careful about the bond market. But nobody can say that during these times that the Wall Street Journal editorial page tried to do the old Homer Simpson and hide in the bush. Every day, into the bush. Every day and every way.
Here's part of what they're writing. The Wall Street Journal writing, the fire Jerome Powell market rout. It reads, if the White House wanted a test of how firing Jerome Powell would go over in the markets, it succeeded on Monday. U.S. stocks and the dollar plunged while yields on long-term treasuries climbed after President Trump renewed his attacks on the Federal Reserve chairman. Markets now, they know that tariffs are taxes and taxes are anti-growth. The Trump tariffs are the biggest economic policy mistake in decades, and extending the 2017 tax reform and deregulation may not compensate for all the damage. Smart presidents pay attention to market signals and adapt, writes the Journal. The adaptation now would be to negotiate a quick end to the tariff barrage, claim some trade deal victories, and call it a day. But markets are spooked because they don't know if Mr. Trump listens to anyone but his own impulses. It's a good time to bring in CNBC senior markets correspondent Dom Chu. Dom, good to see you this morning. Also from the Journal on the news side, this headline this morning, Dow headed for worst April since the Great Depression.
Oh my God.
What is this all about?
So basically what we have is a situation where over the course of the last several weeks, there's been an evolving narrative, if you will, right? We talked about this notion that with new policies, especially on the tariff front, what you have is a new degree of uncertainty brought to global markets, global trade, that then manifests itself in the way that markets have reacted with some of that downside volatility. Now, I remember over the course of the last few weeks having this conversation kind of around the lead up to that so-called Liberation Day and the tariff announcement about the stabilization factor of the U.S. market and the U.S. economy. Over the course of the last several decades, the American economy and the markets, the capital markets, have been seen as a stabilizing force within the global economy and the global market, one that you can turn to no matter what, in good times and in bad. That narrative has shifted a little bit more. It started off a little bit more along the lines of, can you still trust the U.S. dollar? Now, the U.S. dollar is the preeminent and the world's really only reserve currency out there. It's the one that you go to because pretty much every asset out there worth having is denominated in U.S. dollars. The U.S. Treasury market is the deepest, most liquid sovereign bond market in the world. It is the safest place to be. In the course of the last few weeks, there's been a little bit of chatter early on about the luster coming off some of those assets, the U.S. dollar and the U.S. Treasury side of things. Over the course of the last couple of weeks, there is now a full-blown debate in certain parts of Wall Street about whether or not there is a market shine coming off the value of the U.S. dollar and the U.S. Treasury market. In no way is anybody out there saying that the U.S. dollar is still not a reserve currency. There is in no way anybody saying that the U.S. Treasury market is not the place that you want to be. But when you have a possible paradigm shift, a change in thinking about the way that the dollar is valued and viewed in the global market, the way that our sovereign bonds, the U.S. Treasury market, is viewed in the market, that shift or potential shift is enough to have traders and investors, not just here in America, but around the world, questioning whether or not you have to change the way that you think about it. Now, to be fair, Treasury Secretary Scott Bessent, like every other Treasury Secretary before him, has proclaimed the notion of a strong U.S. dollar, and of course the idea that the U.S. capital markets are the deepest, most liquid in the world. The question now becomes, guys, whether or not that incremental effect of not just the tariff and trade policy, but now the attacks on the central bank and its independence and its leader are making those assets, again, relatively less attractive. They are still the most attractive out there, but in a term of relative less luster. Could that change the way that people think about the way that U.S. markets operate? That's what you're kind of seeing play out right now.
All right, CNBC's Dom Chu, thank you so much. Greatly appreciate it. And I love how Dom pointed out that we're still, obviously, where people have gone, will continue to go, most likely. And all of this depends on what Donald Trump decides he wants to do. I think that's what's rattling the markets, is that it's one person who's deciding how far he takes this. But the United States does remain this massive economic power, and while this has been the worst April since the Great Depression, one wonders if he starts striking deals with the UK, with Europe, with Japan, with South Korea, and stops talking about Jerome Powell. One wonders if that market doesn't go back up.
It certainly may, and investors seem like have built in that expectation, but it hasn't happened yet. And let's be clear, we're now
Well, yesterday was because of Powell.
Powell down to almost 1,000 points.
Yeah, very concerned about that.
The Powell talk, it rattled the markets. And the trade deals, we're now 3 weeks since Liberation Day, 3 weeks tomorrow since so-called Liberation Day. Nothing's done. There has been some preliminary talks, I'm told, furthest along with Japan. There have been some others, negotiations that have begun as well, but nothing's done. And in fact, even some very Trump-friendly economists, Charles Gasparino, who we know the White House listens to, is on Fox News, last night was talking about how he believes there's been real snags in the deal with Japan and that nothing is close, that Bessent overpromised the speed in which these things would get done. So therefore, if indeed this does drag on for days and weeks longer, which it seems likely, then it becomes a question of Trump's pain threshold. Is he going to push another pause, perhaps, to buy more time, to maybe boost the markets? Right now, they're rattled.
Well, you know, again, it's a lot like what I said about Doge early on. I think transparency would have been the better route to say, this is what we're doing today. Today we're going to be looking at USAID. These are the programs we're concerned about. And do it that way. Don't sneak up on people. It's the same thing with the tariffs and the negotiations. I mean, I'm pretty confident. Let me just say, maybe, kinda, that you know, they want a deal. They want to move toward a deal. But if they've hit a snag, it would be good. Say, these are what we're negotiating, just like they do with arms deals. We've had an issue on this problem or that problem. We're talking to Japan. We're going to work through it. But that transparency would be very good for the markets.
This is where that Silicon Valley, Elon Musk, move fast and break stuff thing catches up to.
Don't work. Yeah. And by the way, look
with the federal government.
Look where Elon Musk, he tried it. Look where he is today.
Yeah.
It doesn't work.
Right.
It doesn't work.
And talking to some people too in Washington, they believe now the president's trying to set up Jerome Powell as the villain.
Right.
Well, because he sees what's happening to the economy. He understands perhaps that he's made a mistake with these tariffs. He's watching the markets tank, worst April since the Great Depression. He doesn't want that on him. So now he's trying in some way to say he won't cut rates. It's his fault. If he would just go along with me, the economy would be fine, which is not true.
And speaking of Musk, we should note today there's a Tesla earnings call today. Some people believe that Musk in that call might reveal how much longer he's going to stay working for the administration.
And how well the company is doing.
I mean, again, their problem is, part of the problem, Jonathan, is a political problem, obviously. The very areas where he used to get the most, you know, whether you look at California or let's just say bluer states where he'd find most of his EV customers. Those sales are drying up. You look at France, you look at Germany, you look at his EV sales in Europe getting absolutely pounded because, again, he got involved unnecessarily in far-right politics to little to no effect. In fact, God, have you looked at the numbers in Canada lately? I mean, Carney is going to probably win an outright majority there. You look at what's happened across Europe. It's not working. All he's doing is damaging his brand. And then China. I mean, if this were just politics, that would be one problem with Tesla. The problem is he's getting lapped in China on technology. again, I'm not giving Elon Musk advice, but the last thing this guy needs to do right now when he's getting pounded, what has he lost, 150 billion dollars? Like, it is time to go back to your day job. I mean, he's getting pounded. Tesla is getting routed.
Yeah, the trade war with China certainly doesn't help there. And let's note again, there's been no conversation, zero, between the United States and Chinese negotiators on any kind of trade deal. And we've seen Tesla's vehicles fall off a cliff in Europe, their sales. And here in the United States, it's certainly in blue enclaves where his most faithful customers used to live. You see it in the streets of New York City, you see it in Washington, bumper stickers put on Tesla saying, like, I had this before the election. Like, you basically trying to get some difference, some separation.
And again, Jonathan, even more damning, he's being lapped. Like technology, the cars are better in China. They're cheaper in China. They're doing Tesla can't compete in China. That in California are two of his biggest markets.
Yeah, and that's why we have seen the company's fortunes really suffer here of late. And there's certainly a widespread belief that Musk will start to wind down, maybe rapidly, his time with the administration in order to try to pilot and right the ship with Tesla. But he's got a lot of obstacles, self-created obstacles in front of him.